Hello, good evening, students. We are going to see IND-AS 10, that is Indian Accounting Standard 10, events occurring after the reporting period. Okay, events after the reporting period. This will take 30 to 45 minutes. Please stay tuned. I will go step by step. Okay. See, first, what is the meaning of this? Let us see. You are preparing financial statement, okay, on the normal assumption that see you have to take both balance sheet, P&L account and balance sheet. The assumptions are made in which part? Only in balance sheet, right? Because P&L account is mostly the real expenditure or income. There is no assumption there. See, if you are going to pay X amount as rent, there is the amount. So there is no change. Similarly, Y amount as salary, that's correct. Similarly, Z amount as sales, unit price or sales value is going to be the same. So I have very little assumption in the P&L account, right? So the problem will come where? Correct, only in the balance sheet. The balance sheet, there are many items starting from inventory. Okay, I may have, for example, I am a mobile phone dealer. Some of the mobile phones may become obsolete after the reporting period, so the inventory value may be different. Okay, or I may be a tourist operator. Suddenly, the event after this balance sheet date, for example, like this India Pakistan issue, that may affect my business. So in balance sheet, there are many values. They are prepared on the assumption that the business will continue. Inventory valuation. Similarly, receivables very important data, because you assume that the debtors will continue to give money, right? Let us say you have only 10 big debtors, so you are a contract business contractor, and even if two or three don't pay, it's a big money to you. See, if you have 100 customers and two don't pay, that will not affect your overall P&L or balance sheet. But if you have only 10 customers, you are a big contractor, and if uh, two of your customers or clients are in trouble, then your whole assumption is wrong, right? So debtors, similarly creditors, then the assets, if it is a factory, okay, and if it's a big machine, the machine may have some major repair, or it may go out of what do you call the technology, for example, because suddenly the new technology, if you want to produce for a business to survive, the old machine cannot produce in the new way, right? So there are many assumptions made only in whether it's a loan or fixed deposit, or if it is an investment company, I invest in shares, equity companies. Then if it's a manufacturing company, plant. Then if it's a trading company, debtors, right? And if it is whether it's a trading or manufacturing, the inventory. So the balance sheet contains lot of I cannot say assumptions. It is more like it's a practice that the value will continue to be like that. Okay, that it may undergo a change. Okay, so the more will be only in the balance sheet and less will be in the P&L account. Okay, so now we see objective, scope, definition. When you have to recognize, then adjusting events after the reporting period and non-adjusting events. These are the two important. Okay, let me highlight it. 1 minute. Yeah, sorry. Yes. Adjusting event means where you have to make an entry in the financials, basically. Okay, non-adjusting, you don't have to make financial adjustment. I give you two examples. uh, you you assured your employees a bonus, okay, but you didn't have enough money. Maybe some of the big customers did not pay money, okay, so you did not pay bonus, okay. Then in the month of April or May, then you collected everything. That means you are supposed to pay bonus. Okay, so that is why I said that belongs to which P&L account or balance sheet? Correct, P&L account. That means that is for the service rendered for the previous financial year. That is for the March ending, right? Then you have to make adjustment. Okay. If it is non-adjustment, if it is a factory, a big machine is having a problem and your business may get affected subsequently. See, very important. That means that until March, whatever sales you made, that is not going to change, right? See, even if I am going to have a big problem with one customer or one machine or some product or some export problem, right? Whatever happened will not change. But from April month, my sales may change, my production may change. Okay, then I have to make a disclosure. So that is the example of non-adjusting events. That means still I have to inform you. Okay, inform the shareholders or inform the readers. It can be bank, it can be to the government company law board, or it can be uh, to the shareholders or to the whoever is reading the financials. But I have to tell them. Okay, it can be a big contract. Okay, which I am assuming that I will get it. If I don't get it, then I have to inform. So the readers will know that my performance may not be the same like last year. See, this one I don't have to adjust because nothing has changed in last year financials, right? Only the current year financials it may have an impact. So adjusting events means where I have to make adjustment. Non-adjusting means I have to make a disclosure because the impact may be only in the current financial year. Okay. Then dividends. Dividends, I mean, what I proposed, okay, that is only a disclosure because that will not affect the previous year. Then going concern, okay, I think these are the, so let us go one by one now, okay. Okay, what is the objective? The objective of the standard is to prescribe when an entity should adjust its financial statements for events after the reporting period. That means, as I already explained, when an entity should adjust the financial statements, okay, and when the entity should give disclosure, okay, about the events. So the objective of the standard is to prescribe when the entity should make adjustments and when the entity should make disclosure. Clear? Okay. Okay, this is very important. The standard also requires the entity should not prepare its financial statement on a going concern basis if events after the reporting period indicate that the going concern assumption is not appropriate. Sir, can you give me an example? Let us say I am in a business that requires license. Okay, it can be some government contract. I have to have a license. After the financial year, okay, I don't fulfill some condition, then I don't get license. See, if I don't get license renewed, that means my very existence of the business gets doubtful, right? See, if there is a key employee, the employee resigns. If there is a key customer, the customer is not continuing business. If there is a key supplier, he is not supplying. Okay, that will affect my business, but that will not stop me from continuing the business. Right? There's a two difference. The one which affects my business, the one which prevents me from continuing. That means the second is where I need a license. It can be a driving institute, okay, where I need a government approval, or it can be a factory which needs a certification for a factory to continue. I get some, let us say, the pollution control certificate. I don't get the certificate. That means I don't have the basic assumption to continue the business. So that also I have to inform. Okay. So the three important items. One, where I have to make adjustments after the accounting period, after the reporting period. The one where I have to make disclosure. The third, where it is affecting my going concern basis assumption itself. Okay. So these are the three situations or three factors or conditions this AS10 deals with. Okay. Now we go to the scope. The standard shall be applied in accounting for and disclosure of events after the reporting period. Okay, that's fine. Yes. Then we see the definition. Definition, anything important here? Okay, again they repeat the same thing. The one which need adjusting events after the reporting period, then the one needs non-adjusting events. Okay. Okay. So if there is a breach of material condition in a contract, okay. See, these are all it's all how much it impacts the business. Okay, if I have a long-term loan arrangement and if that loan is not continued or I have to repay, then I have to sell my assets. So if I have to sell my assets, then I cannot continue my business, right? So it all depends how my business is affected. Okay, so then I have to consider as an adjusting event. Adjusting event means correct. I have to make an entry in the books. Okay, let me see. Then these are all. Okay. So what are the adjusting events after the reporting period? Okay. Okay. This is a very good example. See, there is a court case which you are fighting. Okay. Let us say you copied somebody's business. So that business owner is filing a case against you that your product is same as mine. It can be a mobile company, or it can be a toy, it can be any, even it can be a keyboard or anything. Okay, so that is pending in the court. Now that means after the reporting period. Okay, after March and before approving. Let us say you are approving in June month, like today, May month, you are approving. Okay, there you come to know the court case. Judgment is out and it is against you. That means you cannot continue that particular product and you have a problem. Then you have to make an adjustment. See, the settlement after the reporting period of a court case that confirms the entity had an obligation at the end of the reporting period. That means you have to make a penalty. You have to pay a penalty to the person who filed the case, or you have to discontinue the product, or you have to return the particular product at a very low price. Okay, those things you have to make adjustment. Okay, then asset was impaired, the amount previously important need to be adjusted. Okay, so previously you estimated that the machine is having a problem, but you can repair it and you can continue the business. But during the period, that means same like after the accounting period and before the signing period, it further confirms that the asset is completely not in use. Okay, it cannot be repaired. Then you have to adjust the financials. Okay. This is a very good example. See, that's why always remember the balance sheet. A customer has become bankrupt. Okay. Previously you made a provision only. Okay. Now if it is a bankrupt, then you have to make adjustment in the financials. Similarly, you are in a fashion business, and in the month of May, that particular inventory what you are carrying, let's say is a significant value, let's say it's like 40 to 50%. That product is out of fashion, so you cannot sell anymore, or you have to sell at a very low price, you have to give it a huge discount. Then you have to adjust between your carrying cost in the inventory and the net realizable value. Carrying cost in the inventory and net realizable value, whatever the difference, you have to adjust it in the financial. Okay. The determination after the reporting period of cost of assets purchased. What this one says. Okay. Previously not recognized. Yeah. So I did not recognize previously the cost of assets purchased or the proceeds from assets sold. Okay. Where I did not make an estimate. Now you have to make an estimate. Then you have to include it in the financials. Okay. The fourth one is the one what I said. if it is a profit sharing or bonus payment where you did not pay and you did not make a provision because you didn't have money, for example. Now you have collected money from the customer. Okay. Now you have legal obligation. Then you have to make adjustment. Okay. Then if it is a discovery of fraud or error, that for example you have a branch. Okay. That branch suddenly the cashier has committed a fraud and you cannot receive money from the customers because the customers paid to you, but the customers paid to the branch manager's personal account, for example. Okay, somehow the manager convinced the customers that you pay to my account is as good as you are paying to the head office. Okay, then in that case, the discovery of fraud, you have to report it in the financials, whatever the loss. Okay. Okay, now we come to another important aspect. Non-adjusting events. That is where you don't have to adjust, but you have to disclose. So this is the same. Always remember the balance sheet. Okay, let's go one by one. One by one. Yes. Okay. So you have, let's say, 10 branches, and 2 branches you are going to sell it to some other company who is interested to buy, because it is in a different city or different state. You don't have enough manpower to go and manage it. So that one you have to only report. It does not affect your big business. So a major business combination after the reporting period. Okay, or you are acquiring a subsidiary. Okay, either way, you are selling your 2 branches or you are buying another company. Okay. Similarly, announcing a plan to discontinue an operation. Let us say you are having 5 products, okay, big products, and 1 product you are discontinuing. It doesn't affect your business much, but it makes a significant impact in your revenue. So you have to make an announcement. Okay. Then the major purchase of assets. Okay. Similarly, see, for example, you are a real estate company. Okay, and you have been previously renting all the JCB machines or the cranes. Now you decided to buy those assets. Okay, that's a major business, major cost. So that the reader of the financials should know that next year you are going, the company is going to have a different set of costs. Okay, that they should know. So you have to report it. Okay, this is same. You have a factory, okay, and you have 5 plants, and 1 plant is destroyed by fire. Okay, that you have to report. Okay, this is an interesting one. See, you are having difficulty in your business, okay, and you want to close 1 plant and ask the employees to go home. That means you are going to pay. They call severance payment, or we call gratuity in India. Okay, RVRS, voluntary retirement scheme. So in that case, you have to make a disclosure that I am going to close 1 division, okay, and I am going to make a payment. Then, okay, see, until the reporting period, let us say you have 10 lakhs equity share capital. Okay. Then before signing, the equity share capital has increased to 15 lakhs. So the 5 lakhs can go to who? Only to the existing shareholders normally, by way of right share or bonus shares. But here in this case, you are acquiring some other business, okay? For that, you are issuing shares as a consideration. That you have to report. So major ordinary share transactions and potential transactions after the reporting period, other than capitalization of bonus shares or share splits. See, other than that, okay. So you are issuing shares for some other transaction that you have to report, okay. Then you are a foreign currency dealer, or you are having a multi-currency business. Then that has a good portion of your assets. Then that currency is having a big change. that you have to report it. Okay. Okay, this is important. Say, for example, GST came in April, let's say. Okay, you prepared until March with the existing tax rates or tax law. When the GST comes, the rate is totally different. The rate may be dropped from 32% now to only 18%. Okay, then you have to make a disclosure that there is a significant change in the tax rates, and my tax liability may go up or come down depending upon whether you are a buyer or seller of the particular product. Okay, so we change in tax law. If you are giving a guarantee, so then same thing. See, assets, machine, factory. Okay, then we saw debtor, bankruptcy, then cash on hand. It's a foreign currency. Okay, then what else we saw? Then any share capital increase, okay, in the liability side. Then you have any branch that you are discontinuing. Then changes in tax rates. So if there is a tax rate change, you have to import. Sorry, yeah, this is the loan. See, you are covering almost every part of the balance sheet. Okay, every part of the balance sheet. Now it's a loan. You are giving a guarantee. You are getting a guarantee. Now the guarantee becomes you have to honor. You have to make payment. Then you have to disclose it. See, the guarantee will. Let's say you are a real estate builder. Okay, then you are given a guarantee that within 2 years I will complete the project. If I don't complete, I will pay 5% penalty. Okay. Now, after March, before signing, the 2 years over. Now there is a good chance that the 5% penalty may happen, right? See, still you can negotiate with the client, but the alarm bell rings because the 2 years over. Now we are in the month of April. That means the 5% penalty may arise, so that you have to disclose. Okay. Then the same thing, if any major litigation, which you already saw, any court case, events after the reporting period. Okay, so always remember the balance sheet when you disclose non-adjusting. If it is a P&L, if it is an adjustment, remember the P&L. Okay, so these are the main points in this AS10. Okay, thank you.